In company news, Anglo American Platinum has been hit by a triple whammy. During the annual period, the miner had to contend with increased costs, lower output and weaker commodity prices. This resulted in a 71% decline in headline earnings per share to just over 53 Rand. And joining me as we unpack the year that was for the miner is CEO Craig Miller. Thank you so much for your time, Craig. Now, your PGM production was within guidance, but where would you place it in a scale of 1 to ideal?
So look, I think, obviously a 5% reduction in annual output is not necessarily, I would classify that as ideal. But we've certainly got our work cut out for us in terms of being able to navigate the current macroeconomic challenges that are facing the business. So we've certainly experienced lower output, but some of that is really caused by the factors that we have here in South Africa. So load curtailment, for example, that did impact our business last year, and we weren't able to produce about 80,000 ounces as a consequence of that curtailment. So no, certainly we've got some work to be done, but I do think it's an incredibly credible performance given some of the challenges that we experienced. But more importantly for our business, and this is now the second year that we've operated without a fatality, which in the mining industry is not unusual, but certainly, is not usual, and certainly demonstrates for us the absolute importance of making sure that everything that we do is safe, and that every one of my colleagues and employees go home every night to their families after a shift or a day at work.
Yeah, well, let's look at the level of PGM pricing that you saw, and where are you feeling the most pain in that basket?
Yeah, so look, the biggest, as the dollar PGM basket price came down 35%, the most impacted there was really palladium. Palladium was down around about 37%, and rhodium was down 57% year on year. So a very material reduction in two of our key commodities, and certainly then contributing to that decline in PGM prices.
Yeah, and of course it's not just the pricing, it's also having to deal with higher costs. Talk to me about the biggest drivers of that ballooning cost base, and if there is an end in sight, at least in the short to medium term.
Yes, certainly our cost base did increase due to inflation and some of those above inflationary cost impacts. So we certainly were not immune, and as one of the large consumers of electricity in the country, to sort of that double-digit increase in electricity costs that does then filter down into our suppliers, and they sort of, they pass some of those costs across to us. So a key driver is really around the energy and around some of the consumption, and therefore that leads into the work that we also have been doing over the last number of months to reduce our cost base. But unfortunately today, really taking as a last resort, announcing a restructuring of our business. And that means that we will be entering into a Section 189A process to sort of review about 3,700 jobs, or about 17% of our headcount going forward.
Well, actually, I mean, with that, how much room is there for Amplats to speed up the cooling down in costs?
Look, I think there's obviously significant opportunity for us to be able to address our cost base and really setting ourselves up to be sustainable into the future. And so in December, we outlined that we would reduce our cost base by about 5 billion Rand from the 2023 base. We've had obviously work underway for a number of months now to be able to achieve that. And the next element of that is really the restructuring that I've just told you about.
Yeah, I mean, just talking about that, restructuring and the retrenchments, does that signal, because I mean, that is really a last resort, does that maybe signal a lack of confidence in the recovery of PGM prices?
Look, I think in the near term, PGM prices are going to be, sentiment does weigh on PGM prices, particularly in the short term, really linked to what's happening from a global macroeconomic environment, higher interest rates, exchange rate volatility, and uncertain economic growth outlook is weighing on the PGM prices in the near term. And that's then informed how we needed to respond as a business and the decisions that we've taken to be able to reduce our costs and our capital. But I do fundamentally believe in the long-term fundamentals of PGMs and the important role that they can play in a greener and cleaner environment. And certainly as part of the energy transition, PGMs have a critical role to play, and we're really excited about that. And that does then give us prospect in the longer term in terms of realizing higher prices.
And talking about that capital, your net cash has almost halved from the previous comparable period. I mean, with these financial pressures, is there a shift in your capital expenditure allocation decisions?
So yes, certainly in 2023, we spent around about 20 billion rand on investment into the business. Going forward, we've scaled that back as a consequence of the lower price environment. And that is part of sort of the decisions that we've taken today. So, in addition to the restructuring, we also announced that we will be placing one of our smelters on care and maintenance. And that does allow us to be able to reduce our capital investments in years to come. But yeah, certainly we did finish the year with about 15 billion rand of cash on our balance sheet. So still a very healthy balance sheet, but it has reduced consequence of that, the lower prices, the investments in capital, and then also we have some working capital impact coming through as a result of those prices, which has impacted the cash balance.
All right. Well, thank you so much for your time and unpacking those numbers for us, Craig. Really appreciate it. That was the CEO of Anglo American Platinum, Craig Miller.